everyone, good morning and welcome to this Friday's edition of Market Fatafat. I'm AVANTI. It's a choppy global market, but for now we're holding out steady with financials giving the index quite the boost. 10,875 on the Nifty. The Sensex is up a good 320 points, and clearly we're seeing gains among the pharma as well as the auto pack, and that's keeping the broader end of the market as well in firm fettle. Well, let's get on board our team of research analysts as well as Kunal Bothra and Gaurav Vissa on the technicals to chat about the 30 stocks to watch out for on Market Fatafat. Well, let's begin then with a stock from the mid-cap universe, and that is Titan. That's in focus. Let's talk a little bit about what the projections are from the management as well as the festive season, Mubina.
Well, it looks like not only Titan but all jewelry stocks, PC Jewelers, TBZ, all of them are gaining quite smartly today in trade. Now, Bhaskar Bhatt, the MD of the company, has said that they do expect the wedding season for 2019 to be much stronger than 2018. Do remember, earlier there were worries with respect to the fact that there may be no wedding dates this year, but the MD giving out such a strong connotation is something that is worth noticing. Not to mention, he has said that they are on track to getting at least more than 20% of jewelry revenue growth for the year 2019. And of course, another booster shot for jewelry companies is the way gold prices have moved. $1,278 per ounce now on the international gold markets, which in turn is also giving a sentiment uptick to these jewelry companies.
All right, keep an eye out on all of the jewelry stocks, all in focus in trade today. Well, let's move on then and focus in on United Breweries as well. You can see a smart up move in trade today. But what's the take on the technicals, Kunal? Shed more light.
So the stock is on the verge of a breakout, or rather it's just about confirmed that breakout on intraday basis of a bullish flag pattern. The volumes in the last 1 week have been on, the pattern of volumes have been more synchronized with price up moves, and that I believe is a very positive sign. The stock is trading, very close to its, swing resistance as well. So I think multiple breakouts on prices, confirmation from volumes indicates that UBL could be a good breakout candidate and a good buy at current levels, targets of 1420 and stop loss 1360.
All right, keep an eye out. Bullish flag pattern being seen on the daily charts. It's a thumbs up from Kunal. Let's move right on then and chat about Coal India, a large cap stock as well that's on the brokerage radar. Coal India at 242. Karanya, take us through what Prabhudas Leeladhar has to say.
Well, Prabhudas Leeladhar essentially has downgraded Coal India on concerns of volume growth outlook. They've downgraded it to a hold with a target price of 270 rupees and saying that going forward, even in the rest of FY19 and entire FY20, the volume outlook looks extremely bleak. This is on back of, what's going on in the various sectors, including mining and even railway and construction.
That's the take coming in on Coal India under pressure in trade today. Target 270 from Prabhudas. Moving right on then, it's Lemon Tree. That's a stock that's in news today, and in fact in focus on the back of the JV that the company has signed. In fact, this is with Magnolia Grove Investment, and this marks an entry into the arena of rental housing. So that's what the company is going to foray into. The joint venture will initially invest close to 1,500 crore rupees in equity over time, and then has the option to invest an additional 1,500 crores. And remember, this Magnolia Grove Investment is an affiliate of Warburg Pincus, and Warburg Pincus is now going to hold 68% in the joint venture. Lemon Tree Hotels will hold about 30%, and that sure is keeping the stock active in trade today. 9% and counting on Lemon Tree. Moving on then to number 5, let's chat a little bit about Siemens. This stock has been on quite a firm footing over the past many days, and looks like that's continuing into trade today as well.
You got it right, Avan. In fact, this is one of the best performing stocks among quality names in December series. It was up by 12.5% in December series, and now first day of new series we are seeing 1.5% up move. But with that, we are also seeing fresh formation of long position. Stock is hovering around its resistance, which is 1040. As we speak, it has breached that resistance, but near to that resistance, and hence warrants and attention, fresh formation of longs.
Okay, keep an eye out. It certainly is a stock that has been doing fairly well. Significant formation of long positions. Steady in trade today at 1,048. Moving on then, let's pick up a stock from the ADAG basket and flag off Reliance Infrastructure as well. That too is on a firm footing in trade today. So what exactly is the chart pattern? What are your takes on the technicals, Gaurav?
You're talking about Reliance Infra?
That's right.
It has given a couple handle breakout on a 4 hours chart. It has also given a breakout from consolidation pattern on daily chart. So I would recommend buying the stock with a stop loss of 305. On the upside, 325, 330 is what I expect in the next 2 or 3 days.
More upside on the cards. That's Reliance Infra for you. What else is buzzing away in trade today? There's SAIL as well, and the management is talking a little bit about domestic steel prices. Let's take it across then. Mubina, give us a sense as to what exactly the commentary is hinting.
Well, yes, the SAIL management has spoken after very long, mind you, and he has said that any downtick from here on for steel prices would be a bit detrimental to the company's own financials. However, in the same note, he does say that he believes domestic steel prices seem to have bottomed out. Reason being, well, two key reasons and two key highlights that he has witnessed, at least on ground, when it comes to his business. First up, the entire destocking bit, that according to him has been substantial. And the second reason is that domestic demand is coming back to track with improvement in the liquidity position. So that's the reason why he believes domestic prices have already bottomed out. And it's not just SAIL, but all steel companies today are witnessing an uptick coming by.
Okay, yes indeed, that's the entire basket. A lot of the metal stocks which are holding out in trade today. A word from the management. Moving right on then from metals to auto, and let's talk a little bit about Tata Motors. JLR quite an overhang, but what is HSBC's view, Karanya, that the woes are likely to end?
Well, before I go on to the HSBC note that's come out, one needs to understand that even the management has addressed it in a big way, the Tata Motors business plan going forward. N. Chandra in his address to the employees has mentioned about their EV plan, saying that they are working very closely with internal entities, including Tata Capital, including Tata Power, in order to come up with better efficiency, come up with better innovation and technology when it comes to electrification of vehicles. But moving right on to what HSBC is saying, they've maintained a hold stance, giving a target price of 200 rupees. What essentially they're saying is JLR's weakness looks like it's set to bottom out in 2019. But they're not seeing too many triggers at this point of time in place. The absolute valuations also appear undemanding as well. However, not only are the upside triggers missing, but there are also multiple worries which could affect the business over a longer period of time. Cash flow set to remain stretched according to them for the foreseeable future, and hence they are fairly cautious on this counter, maintaining their hold stance.
All right, that's the view coming in from the management as well as brokerage, and that's how the stock is dealing with it, 171. But let's move on to another heavyweight, and yes, of course, the PSU banks have been in focus of late with respect to the PSB recap, but the stock price of SBI is also in news as the bank is sought bids from merchant bankers to run the process of a QIP worth 20,000 crore rupees that they are looking at. And this issue size is going to be based on various factors, but the management said that it's not limited to the decision of the shareholders, etc. They're looking to initiate work regarding the same. They will be selecting the merchant bankers for this QIP as well. And the last date for the interested parties to submit their bid is the 5th of January. Remember, the management had indicated earlier at the time of the results that the money that they raise will be deployed significantly for their growth plans. Away from SBI, then let's focus in on number 10, and that is Reliance Capital. Another one, Siddharth, from the ADAG basket. Let's talk a little bit about the price volume breakout here.
Well, before I talk anything, ADAG group of stocks, we are just talking from statistical point of view. Now, for many years, stock has come back to this 195-200 zone, and from there it bounced back. Now this bounce back is going on. Intermediate resistance of 222 is also breached, and we are seeing significant formation of long position, and this seems to be a price volume breakout. This is purely a technical and derivative observation, and that should be taken note of, because ADAG group of stock time and again they have given such kind of breakouts, but that fizzles out and that they make new lows.
All right, that's the word coming in the entire pocket, and that's Reliance Capital as well. That merits a mention, bouncing up in trade. Meantime, it's NCC as well that we should flag off, because the stock is looking quite firm in trade at 86. Kunal, do you reckon that even for the long haul, this sort of momentum is here to stay, or is it just going to be a sort of a short-term move?
So I think the stock is trying to absorb all that negativity which it had gone through, I think, in the later half of 2018, and now making a very good comeback. So in terms of price patterns, it's forming a bullish flag pattern spread over the last, I think, 2 or 2.5 odd months. I think from those October lows of closer to 70, sub 70 levels for NCC. Now, it's a high beta stock, so a high beta stock is bound to give you those volatile whipsaws as well. But I believe largely the pattern is extremely bullish for NCC, and I believe the stock is still in the consolidation range. So the risk reward is also favorable into entering long positions over here. 92 is a target which I'm expecting on the stock price in the very immediate term, and stop loss to be kept at 82 levels.
All right, keep an eye out on NCC, long haul as well, good to go. Number 12 then, Jefferies has come out with a report on consumers. What exactly is the call coming in on Dabur in particular, Mubina?
Well, Jefferies is very cautious on consumption undoubtedly, but they are saying that the raw material costs for both food as well as non-food segments has come down very, very sharply, and that is something obviously that would bode well for the margins of the summer. Valuation still very, very expensive, but they are being cautious and they're selectively picking out some stocks. So Dabur India is one of them. ITC and Nestle too are the other stocks Jefferies is picking out. But yeah, Dabur today is half by a cent and a half.
That's something to keep an eye out on. 436 on the back of the Jefferies note. Meantime, it's HDFC Bank as well that is on the brokerage radar, and looks like MK is giving it a thumbs up. Karunya.
In fact, they're calling it an epitome of stability. They maintain their buy rating. The target given by them is 2500. It's the process-driven approach and strong leadership backup, which is, according to them, going to ensure minimum disruption from any management change. Do remember that Aditya Puri may or may not contest for continuation as MD CEO beyond 2020. This will only happen if the regulatory changes do raise the bar of age. But apart from that, the benefits of digitization, according to MK, are reflecting in the lower OPEX ratios and could be the new normal, which could gradually contribute to better ROAs. They believe HDFC Bank will continue to command premium valuations, 3.5x of FY20 and FY21. This is, of course, these are some triggers that they have highlighted, other than the fact that they are looking at it as a very stably growing bank. Buy rating target at 2500.
All right, keep an eye out on that stock. HDFC Bank holding out quite well, and clearly a lot of conviction being given by the brokerage. But speaking of MK, they've also come out with a note on Ultratech Cement. Let's take you through what exactly they have to say. They maintained an accumulate stance with a target price of 4,359 rupees. In fact, they believe that the acquisitions will be earnings dilutive in the near term, and they're talking about an EBITDA CAGR of 15.5% between FY18 to FY21. That's the estimate. Clutching onto the 4,000 mark, that's where it's currently at in trade. And then there's PC Jewelers at number 15. We spoke about Titan. Some of these jewelry stocks sure are active, Siddharth.
The kind of fall PC Jeweler, the kind of fall which took place in PC Jeweler from 600 to almost 60 rupees, that was 90% fall. This again, like Reliance Capital is a very high beta, a very riskier stock. But because of such great fall, what is happening, Avan, that even a small bounce back is leading to big change in statistics. Case in point, PC Jeweler was the best performing stock in terms of percentage in December series. It has started new series with a bang, 3.5–4% up, and we are also seeing fresh formation of long position. Now PC Jeweler has tendency of coming into FNO ban. Very few stocks do come into FNO ban these days after change in rules, and PC Jeweler is one among them. It is quite likely on back of strong rollovers and now again formation of long positions that stock might come into FNO ban. It is still not there in FNO ban, but it might come into it.
All right, that's something to keep an eye out on. Yes, PC Jewelers has caused a lot of heartburn for investors. But on that note, tell you what, we take a quick break, come right back for more on Market Fatafat. Good to have you back. This is Market Fatafat. We're making our way gradually towards the 10,900 mark. It's holding out very well in terms of banks, and you're getting a lot of support as well coming in from the rate sensitives. Well, let's get right back to the countdown and focus in the aviation space. And clearly, it's under pressure for Interglobe Aviation. What exactly are the comments coming in from the House panel, Mubina?
Well, the parliamentary panel has actually said that Interglobe Aviation is one of the worst performing airlines. So not at all good news, worst performing carrier for consumers. And this is of course coming in from Derek O'Brien, the TMC MP, as well as from the parliamentary panel. He believes it's the worst performing airline for consumers, and 30 members agreed on this of the parliamentary panel. Indigo has not been responding despite many complaints with respect to behaving with consumers or just charging for 1 or 2 kgs of overweight baggage. Indigo certainly is among the worst among them. Additionally, another Indigo A320 Neo plane suffered a mid-air P&W, that's the Pratt & Whitney engine shutdown. So that as well has added to the woes of the company.
All right, that's keeping the stock under pressure in trade. Not very encouraging commentary at all. But let's chat about pharma as well, and some approvals coming in for Dr. Reddy's, Karunya.
Tentative approval at this point of time that's coming from the US FDA for Dr. Reddy's. This is for an oral drug that goes by the name of naproxen. It's a non-inflammatory drug essentially used to treat rheumatoid arthritis, pains and cramps in the body, etc. So it's a tentative nod, but yes, the stock is responding very well to the development.
Okay, a tentative approval, and that's keeping the stock upbeat in trade. Moving on, then let's focus in on HCC as well. That's the newsmaker in trade today with respect to the funds that the company has raised. 497 crore rupees is what they've raised from the rights issue. Remember, the issue was oversubscribed, with HCC getting applications worth close to 551 crores for the sale, through which it is going to issue 49 crore rupee shares. With this, the paid-up equity capital is going to go up to 151 crore rupees, and the promoters is going to increase their shareholding to about 33%. The management has said that they are firmly on the path of strengthening their financial profile. Moving on, then, let's focus in on stock number 19, and that is Union Bank, a price volume breakout, Siddharth.
Well, yes, and it's not alone in that category. There are many PSU banks which are doing well, and our technical experts have been pointing out that. Why we are talking about Union Bank? Because as you mentioned, one of the recent price volume breakout, and this is happening above 200 DMA. Plus there is a huge formation of long position backed by strong volumes. So a lot of PSU banks are doing well, but the chart pattern, but the derivatives data for Union Bank is much clearer and favorable.
All right, watch out. Above the 200 DMA, a price volume breakout being witnessed in Union Bank. And at number 20, then, it's Indian Hotels. And Kunal, we don't flag this stock off pretty often. Fundamentally, it was plagued by a lot of problems. Financials seem to be turning around. What do the charts suggest?
So the charts seem to also turn around for Indian Hotels, and I believe that the stock is on the verge of a breakout on multi-month charts. 2018 approximately, the stock was gyrating in a big broad range. I think 150 as a resistance, and closer to 125, 130. You saw a lot of supports building up for the stock price. Now it's testing that resistance for the 4th time in the last 3 months as well. I believe a breakout is likely for Indian Hotels. Suggest a buy with a target of at least 166 and stop loss to be kept at 141.
All right, conviction being seen in Indian Hotels. 166 is the upside target, and high volumes is what we've been seeing over the last few weeks. So let's move on then away from Indian Hotels to Avanti Feeds, and that clearly continues to remain in focus, Mubina.
Well, yeah, it's not just today, but for the last 3 trading sessions, in fact, in totality, that we are seeing an uptick coming by in Avanti Feeds. But do remember, this has been followed, this is following, of course, some selling pressure as well that we did see. So, last 1 week, we've seen a lot of pricing action coming about. But for now, at a level of 391 rupees, the stock is once again at a 1-week high, making its way towards the 400 rupee level. It's another 1.5% higher today in trade.
Okay, that's the take coming in on the stock, clearly in focus. And then there's Ashok Leyland as well. And what exactly are the brokerages saying? It's a bit of a mixed view. The stock is up 0.5%, Karunya.
It is a mixed view. In fact, there are 2 brokerages that are keeping Ashok Leyland on their radar, Stewart and Mackridge. It's a small brokerage firm, but they've initiated their coverage of the stock with a target of 113. They say that pre-buying of CVs just ahead of the BS6 transition is something that will boost demand. However, going further into 2020, they are expecting a volume degrowth, and they are quite sure that the cycle will peak out post that. MK also downgrades it to hold. Target is the same as Stewart, 113. They see reversal in the MNHCV cycle, driven mostly by surplus capacity, increasing cost of ownership, selective NBFC financing, and of course, the fact that the base is extremely high.
All right, keep an eye out on Ashok Leyland. That's in focus. Meantime, it's United Bank of India as well. That's another stock from the banking space that we're flagging off today. That's largely on the back of the news that has come in that the government is infusing close to 2,159 crore rupees. This is going to be via preferential allotment in United Bank. In fact, this is going to be done in about half a dozen banks. Remember, the Finance Ministry had informed that the bank about this capital infusion a couple of days ago. This is according to sources. Remember, we also got you that ET Now exclusive, the 28,000 odd crores would be pumped into 7 PSU banks via the recapitalization bonds soon. That is keeping the stock active in trade today, 8% and counting. Time to move on then to BEML at number 24, and let's understand why exactly the stock is chirpy in trade. Siddharth, what are the observations?
Well, last fortnight we are seeing, or since fortnight we are seeing that there are very high volumes in cash market in BEML, and stock has been doing pretty well. It has moved from 700 to 900 in last 2.5 weeks, Avan. And today we are seeing around 14 to 15% rise in open interest in future segment. In fact, 16% now rise in open interest. Needless to mention that the price action is showing that these are formation of long position. It is consolidating, moving slightly away from its 200 DMA on the upside, which is again a positive observation.
That's the take at 913 on BEML. And on that note, we'll wrap it up right here on the show. Thanks so much, guys, for joining in, and thanks for watching. Coming up next, we have Markets at Noon.